higher bottoms, MACD அதெல்லாமும் பார்த்துருக்கோம். அதே மாதிரி ஆசிலேட்டர்ஸில் கவுண்டர் ட்ரெண்ட் சிஸ்டம்லையும் MACD யூஸ் பண்ணுறது, RSI யூஸ் பண்ணுறதுலாம் நம்ம பார்த்துருக்கோம். ஈவன் ஃபிபனோக்கியும் நம்ம வந்து ஸோ நம்ம வந்து ஏற்கனவே வந்து நிறைய ட்ரெண்ட் ஃபாலோயிங் சிஸ்டம், கவுண்டர் ட்ரெண்ட் ஃபாலோயிங் சிஸ்டம்ஸ்லாம் பார்த்துருக்கோம். ட்ரெண்ட் ஃபாலோயிங் சிஸ்டம்ஸில் மூவிங் ஆவரேஜ், ஹையர் டாப், ஹையர் பாட்டம், MACD அது மாதிரி பார்த்துருக்கோம். அதே மாதிரி கவுண்டர் ட்ரெண்ட் ஃபாலோயிங் சிஸ்டமில் நம்ம RSI, MACD இதெல்லாமும் நம்ம பார்த்துருக்கோம். ஃபிபனோக்கி நம்பர்ஸும் நம்ம ஏற்கனவே பார்த்துருக்கோம். பட் இப்போ எப்படின்னா நம்ம இந்த ஃபிபனோக்கி நம்பரை எவ்வளோ எப்படி ஈஸியாக கையாளலாம் அப்படின்றது தான் இப்போ நம்ம பார்க்க போகிறோம். ஜென்ரலாகவே இந்த ஃபிபனோக்கி இங்கிலீஷா நீங்கள் ஓகே ஃபர்ஸ்ட்டாக எடுத்துக்கலாமா? ஓகே, இது என்ன கட் பண்ணிடுறீங்களா அப்போ அதை? ஓகே. ஸோ now we are going to look at the investment, that is how we are going to approach or trade this market using Fibonacci number. Previously we have seen trend following systems and counter trend following systems. Trend following systems we have seen moving average, higher top, higher bottoms, then MACD and all. Counter trend system also we have seen RSI, and now RSI divergence helps us to spot the top and bottom. These things we have seen. Now Fibonacci numbers also we have seen before, but we are trying to give a different angle to the how to use the Fibonacci numbers and Fibonacci ratios, so that we will know in a predetermined manner using a trend line, which we will have in the next session, that is Fibonacci trend lines. Using these trend lines and the numbers, we can have a predetermined approach to market, that is to suppose if it rises to some extent, where the resistance will come. Suppose if it falls, where the support will come. So these things we are trying to give a different approach. Of course, the normal pivot point formula as well as the pivot points, the standard pivots also are very useful to determine the support resistance. The Fibonacci gives the extra edge for us to trade in the market. These are all different types of approaches to the market. So whichever is comfortable for you, you should use, because there is nothing like this is the only way you should look at the market. You can have different types of approach. This is one approach. Okay, so and it's an easy approach, because even if you are not before the system, you will know to what extent the market can fall, market can rise. To that extent, it will be helpful. Now we have seen Fibonacci numbers previously also, and we have seen 1, 2, 3, 5, 8, 13, 21 like that, and it goes on like this, 89, so then 144, 233 like that it goes. Then at some stage it goes to 610, 987, okay. Then you add this, so it will give 1597, okay. So 1597 plus 987, 2597, so 2584 like that, it goes on like this. And then you add these numbers, then you will get some 4000 plus numbers you will get. So you can use these numbers itself from any particular low to look at what the next high will be. Yeah. Or you can use ratios. Ratios in the sense you can look at the top to bottom and then project the next higher level using a Fibonacci ratio. Or otherwise, see, if you divide 1 by this, 1 by this, 1 by this and all, you will get certain ratios. Like for example, you will get 1.235, 1.386, so 1.618, 2 times like that. That also you will get. So we can use any of this one, and also the smaller ratios also will be very useful. That is, you look at something like 1.3%, 2.1%, 3.4, then 5.5, then you add this 8.9, then 14.5, then 23.5, then this comes to the 38.6, 61.8 like that. So sometimes you can use these lower levels also. Okay, lower levels also you can use. Now I told you that these are 3 different classifications we are given in the Fibonacci itself. So let's look at each one of this, and so that you can see to what extent what is the high projection that you can make for Nifty when it comes to next month or the coming month. Okay, to what extent it can go, and if it falls, probably where we will get the support. Now, we have seen just now these numbers 1.145, 1.235 and all, right. So, let us look at the important bottoms and then project these particular ratios also. Now, let us look at the this is a monthly chart, and these are important numbers, right. So, 15,183, this is one important low. So, we will write that 15,183, then 16,828, then 18,835, which is the new low which we got it, right. So, the last month low that we got it. So, in this 15,183, you can make a projection into 1.235. Okay. So, 15,183, sorry, 15,183 into 1.145, it comes to 17,384, right. So, 15,183 into 1.386, 3 into 1.386. So, these are big numbers. That is 21,043. So, now we are below this, right. So, now we are 20,200 plus levels. So, as and when we approach this particular number, okay, I think we will have a serious resistance in the market. Serious resistance can come in the market. Okay. Now, you can look at 16,828 also and make a projection. You can look at 18,835 also and make a projection. So, 18,835, if you look at the 18,835, you know, you can look at 1.089, 18,835 into 1.145 like that. Okay. So, let us look at these numbers, 5 into 1.089. It comes to 20,500. Okay. Now, 18,835 into 1.145, 21,560. 21,560. So, the earlier number, that is the 15,183 from where we made a projection. Now, that is coming closer to the 21,000 levels, right. So, that is coming closer to 21,000. Now, this first resistance now can come here, 20,500, because that is the last important low, 18,835, and from there when we make a projection, okay, this is the first one which we are getting, 20,500 levels. So, we could probably have some resistance closer to that point. Then based on this, we are getting 21,560. So, the earlier one which we projected was 21,000. So, there is a chance that probably the market, we need to be careful in this range. 21,000 to 21,560 is the place in Nifty where probably we could have some sort of a resistance. So, now you can ballpark it, that is okay. Now, the moment it goes above 21,000, we need to be careful, because there can be very, very important Fibonacci resistance numbers based on these ratios. Now, we can cross check this with other ways of doing things. Now, for example, we have seen earlier that the 830 or so, it moved up to 20,200, 225. Then it fell to 18,835. Right. So, what is this? What is the difference? This is a major one, 20,225 minus 16,830, 3,395. This is climb was 3,395. On this, let us do the Fibonacci calculations. 3,395 into the first one was 0.235, right? So, 3,395 into 0.235, 797, approximately 800 points. So, you add this, you will get something like 19,635. So this is supposed to be a resistance come support level. We have seen this time that when it went a little higher, it fell. It took support closer to the 19,650, 60 levels, and from there it started moving up. Then the other one which comes is 3,395 into 0.386. Right. So that comes to 1,310 points. Now, if you add this to this, that is where the top came, right? 18,835 plus 1,310. That is the 20,150 level. That is 20,200 approximately, right? So this is the place. Now let's look at the 0.618. So because that's going to be the next important levels. Okay. So 3,395 into 0.618. Into 0.618. Okay. That is 2,098 or approximately 2,100. On this you add the 18,835. Now you can see this coming closer to 21,000. $20,935. So that is where we saw the 15,180 from where we made projection, that was also coming closer to this number. So this number looks to be the next important resistance as far as Nifty is concerned. So the chance that it may move up to that, and probably we may see from there some dip that could come. Nowadays the dips doesn't come more than 5%. But last dip came close up to the 7% mark. So we had a fall which was around 1,400, 1,500 points, right? So from 20,200 it came to 18,800. So 1,400 points of fall was there. And previously we had from 18,600 to 16,800. That was come closer to the 1,800 points of fall. So right now we are getting a fall which is approximately 7 to 9% doesn't come. So in a bull market normally what happens is that you will not get more than 5% fall, generally speaking. The worst could be something like 9%, 9 to 10% maximum. This is how the fall will be. So you can look at whenever the market falls, you can look at 5%, 5 to 5.5% or approximately 9%. Okay, maximum is 9%. From the peak, 9 to 10% maximum from the peak. Now, if the market goes to 21,000, let us say we have a predetermined levels right now in mind, approximately it can go up to 21,000, let's say. Now, the 5% fall from where probably you could look towards an investment, this is coming closer to the approximately 1,000 or something slightly more, right? So it could come 1,100 or something like that. So you may get a fall which could be around 19,900 to 20,000. Which could be 20,000. Okay. So the last peak that we saw right now is 20,225. So this 20,225 itself, you can make projections, nearby projections that you want to make. That is smaller projections that you want to make. You can use the Fibonacci numbers 144. Okay. 20,002. Now for those who want to trade with very, very minimal stop loss. So 20,255, 225 plus 144. This could come, so the immediate resistance where probably we will have is 20,369. Then 20,225 plus 233. 20,488. Okay. Then 20,225 plus 377. So these are numbers where I'll tell you why the 21,000 will be important. 377. This comes to 20,600. This comes to 20,600. Then 20,225 plus 610. So these are easier way to look towards 610. This is 20,835. It could slightly get exceeded and go towards 20,930, 935. So that is why I am saying that these numbers makes it easier for you to trade. Now, let us say you are looking at something like 20,369, 20,488. If it starts to go above 20,488, then in that case you can use 20,369 as a stop loss. Okay, and if it goes to 20,600, you can use 20,369 as a stop loss. So the moment it crosses one particular Fibonacci number, from whichever way you using it, then whenever it falls, you can take that as a support and the next number as a support and do that. Alternately, you can use one particular Fibonacci number as a number based on a stop loss. For example, this is 144. 144 is a Fibonacci number, right? So since the market now, let us say 20,300, let us say, from there it falls. Normally, it will give the first support closer to this 144 points. That is how it works. That is how, generally, small stop losses, I am saying, smaller ones. So this could be the next important support, that is 144 points from any peak, okay. So that is one. Second is just to use the ratio. Now we have seen this ratio just now, and let us say daily chart, very easy to do that is, see now what is the last important low? This is the last important low, and every day we are seeing gaps, right? So there is a gap here, there is a gap here. So right now when we make a projection, we have to say from here 0.235. So unless it starts falling, so now from this low of 19,768, it has rallied to 20,291. So approximately it has already rallied 500 points, right? So approximately 500 points. So whenever there is a rally which is I would say 500 points or more, you can use the 23.5% ratio. 23.5% ratio as a stop loss. So right now we have this level which is 20,158 as a stop loss, because this particular move, if I assume this as a peak for time being, and from the last from this low if I put it, then the first 23.5% retracement comes here. So the first stop loss that we are looking is this 20,166. What are the different stop losses probably we can have? So let us say the last important stop loss can be this. I don't think so you are going to trade with that much of a stop loss. From 18,835 to put it here, 19,940, which is approximately something like at this moment it is coming closer to 340, 350 points, which is a big stop loss, which is quite a big stop loss. So that can be a really big stop loss, because if it falls below that, then it can have more fall. It can have much greater fall. So those who are willing to look towards deeper stop losses can just use 19,943. Can just use 19,943 as a stop loss. So very easy now. The computation. Somebody asked what is the stop loss that I can use. I can give different stop losses. One stop loss is 19,940. That's the bigger stop loss. The smaller stop losses is what we are given is this 23.5%. Just 20,150 or 160. So there is a chance that it can come down even up to 19,960 and then bounce back, or it can come closer to 20,000 and odd and bounce back. So so if you since now we are only looking at right now it's 127, 130 points. So 127, 130 points, if it starts to fall, then again it has to rise from any bottom to that extent before it starts rallying. So the worst thing in normally what we have seen as far as the Nifty is concerned is that the bigger stop losses is approximately 375 to 400 points. Okay, 375 to 400 points. If it starts falling below that, in that case it can fall even up to 1,000 points. That's what we have seen. Okay, so 375 to 400 points is where probably you can keep some sort of a stop loss always. And the smaller stop losses should come closer to that 140 or 150 points is the smallest stop losses that you need to use. Now, this we can use in conjunction with any other technical indicators. Probably you can use normal trend lines also, or Fibonacci trend lines also. We will look at it. So, what we are basically trying to illustrate is, now we are given a Fibonacci number, Fibonacci ratios, and then other Fibonacci ratios using the difference between high and low, and then making a projection. So, which they call as Fibonacci extensions. So, we have done the normal retracement Fibonacci. Now, this is a retracement. We have drawn from one bottom to the peak and looking at to what extent the replacement could be. So, now the retracement we are putting at around 20,168 as a basis for that. Now, if you can look at from any bottom to any top and make a projection. Now, okay, we have to take some very important lows. Now, we have taken 3 important lows in Nifty. If you take a pandemic low, which was around 7,500, and recent high was 20,200. Okay. So, if you make a projection from that also, you can make a projection using lower Fibonacci numbers. For example, from 20,200, and that will still effective, 20,225, 7,550. So, look at this difference, 20,225 minus 7,500, 550. That is the pandemic low. This is 12,675. So, at 12,675, if you put even a 0.235 and make a projection from 18,830, which is a very important one. This is the important low, right? So, that comes to 2,978, or approximately, let me say 3,000. So, 18,835 plus 3,000, right? So, 21,135. 21,835. So, when it passes about 21,000, then it may have a chance to go up to this. If we put a 14.5% on this, now let us look at these smaller ones to make projection. So, 12,675 into 0.145, that comes to 1,837. Now, you add this to 18,835, 18,835 plus 1,837. Now, that comes to 20,675. 20,675. Now, since this number, which is 3,000 is there, you can even look at the next one, which is the 9%, approximately 8.9% to 9%. Then in that case, it will come closer to 3,000 into 0.145 is where we said is 3,000 into 12,675. So, 12,675 into 0.9%. Okay. That will come to 1,675 into 9%. It will come closer to 1,140. So, 1,140 is the next one, that is 18,837 plus 1,140, which is the 19,975, right. So, now this will give a support. Now, this has been breached, right. So, 18,835 plus 1,140, which is 19,975. Since 19,975 has been breached, okay, it will now, if you look at it, then it has to move first to the 20,675. So, since this has been breached, we expect this to be a support. We expect this to be a important support. Now, if you are buying above 19,975, then you put a lower ratio as a stop loss. That is, you can put 5.5%, right? So, 5.5% on 12,675 into 5.5. That comes to 697, or approximately 700 points on this. So, that comes to 19,000 535. So if you cross 19,975, the 19,535 becomes a stop loss. So you can work, if you are uncomfortable with higher Fibonacci numbers, work with lower Fibonacci numbers from a comfortable level. That is the most important thing that we need to look at it. Okay. And in the case of Nifty, bigger trend change normally happens if there is a fall of more than 375 to 400 points. That's how it happens. And very smaller trend change, if you are looking at it, something like 130, 140 points is where there can always be some sort of a correction. Now, you can also use for intraday trading. Now, let us say intraday trading you want to do in Nifty itself, you go for a smaller chart, okay, which is 1 hour chart. Let's say. Now, this is a smaller one, right? So, right now this was one low in the hourly chart, and then after that it has moved higher. So, we will work out from this level what is the Fibonacci numbers, that is Fibonacci retracement from this level. So, if it starts to come lower, these are the important support levels. So, if at all there is a fall which is closer to 20,118, now if you want to go long immediately, then 20,118, put a stop loss at 20,000, this is the 20,015. So, you can buy at 20,118 and put a stop loss below 20015. So, now based on the retracement, we do not expect the retracement to come below this 61.8% retracement. So, if at all it comes a little lower from this level, from 20,291, if it comes closer to 20,120 or slightly even above 20,150, you can buy and put this low as a stop loss, 20,070 as a stop loss. Okay. So, this is you can use the smaller ones to know where exactly the intraday support resistance can be at, or for a very smaller period of time what you can do. Now, since we have this one a gap also here, so the gap can be filled 20,150. So, you can buy closer to 20,150 to 20,120 in that dip. If at all there is a dip, buy around that with a stop loss below this particular low, below this low, which is the 20,015. So, you can use the Fibonacci to classically trade for for the intraday purposes also. Now, let us look at it in the case of some stocks also. So, let us look at let us say ICICI Bank. This is hourly chart. Okay, this is hourly chart, and those who are trading with smaller stop losses should look towards this particular low, that is 942. 952 it has been. So, 942 should be the stop loss for those who are trading on the intraday basis. So, keep 942 as a stop loss, below 942 or slightly below 942 as a stop loss, and look for trading there. Okay. So, in that particular case, what you should do is that you should look at any 61.8% retracement for intraday purposes. In the case of ICICI, just buy. Now, today it dropped, right. So, from the peak, it dropped closer to the 61 point, just 946. If you look at this low, it's 945.35, 946, and bounce back to 947.50. So, maybe from here itself it can go up. So, watch out tomorrow for that, and keep a stop loss below 942 for those who are trading for a very short period, for very small profits. If you are trading, do it that way. Now, if you look at go for the daily chart. Now, so daily chart, you can have this is the you can have any 3 days low is very important as far as these charts are concerned. So, normally you can look at where we can look at resistance come support. We will just illustrate it next webinar how to use trend lines for this. So, now let us say it has broken this line. So, it has broken this line. So, we should expect some support closer to this level itself. which is 942. So you can keep 942 as a stop loss right now and trade, because if it falls below 942, there's a chance that it can go down right up to this level. And just see this. So once this line was taken off, so this has been providing support. So the next important level can come closer to the 925, 926, 927, or probably this level 932 to 930 levels. 932 can be the next important level. So right now there's not much of great activity as far as ICICI is concerned in this bull move. Most of the banking stocks are still working its way above. So we should look at stocks which are quite strong presently. And let's look at Reliance Industries. So Reliance Industries right now, let's look at, see, it has broken this particular level, which is the 2375. 2375 it is broken. So we need a clearance now to go above 2402. So it has to clear 2402 again to resume its uptrend. Now as far as Reliance is concerned, let's look at the bigger chart. Now this is from 2630. So from 2630 it fell to 2220. So approximately 400 points. So 400 points on divided by 2630 is approximately 15%, right? So that's what I've been saying, 14.5%. This 14.5% is what I'm marking, right? So a 14.5% fall was there in Reliance. So this is normally, most of the stocks will not fall by more than 23-25%, generally speaking. So the important falls that will normally take place as far as the stocks are concerned is approximately 5%, 5.5%, which is the Fibonacci number, then 8.9%. So if you see, a lot of these stocks would have gone by 8.9%. Now if you look at ICICI itself, it went up to 995, came down up to 900, right? So this is a 95 points fall, which is approximately 9%. So if you look at the fall, which is 95 divided by 995, yeah, 9.5%. So this is a very important ratio. So normally, the stocks generally, if it corrects by approximately this level. Otherwise, the next level it corrects will be approximately 14.5%. And if it should not, if it's a bull market for the stock, it should not collapse below 23.5%. It should not collapse below 23.5%. And we have seen 23.5 means it could probably a little higher. It could go up to 25%. That's what happened in TCS also. It collapsed from 4,000, collapsed to 3,000. So that was approximately a 25% fall. 25% fall. Now, if you look at Infosys, it has fallen considerably. That is, it fell by around 35%. It fell by 35%. But on a rally, if you look at it, let us say Infosys. So it fell from this level, 1953, and 1953 it fell closer to 1200 levels. 1200 levels. Now, the same thing which I told you as far as the Fibonacci numbers are concerned, you can use this very effectively, this one, right? For example, the ratios can be effective and the numbers are also quite effective. Now, this 1185, when it starts moving up, let us say 1200. So, 1200 into 1.235, it comes to 1482 to 1500. See, look at the stock, it's stagnating closer to the 1500. Because if you take the close basis, this was a important, this was a spiking low. Level. So 1250, the lowest close is 1224, 1225, 1226. So on 1225, if you apply 1.235% on a close basis, 1510, 1512 is very much required. Now it has gone up to 1506, 1507. Let's look at the important ratio of 23.5%. So then the next important support then will come 1225 into 14.5, because that was broken, right? So 1225 into 1.145. That is 1402. So if it starts to break 1402, that is this is the 1402. Right, sorry. Okay, 1400. Now since it has broken 1400, you have to keep 1512 as a stop loss and look towards the next numbers, which will be 1225 into 1.089, 1334. So the next support can come closer to 1334. So look at this number. So that has come closer to 1351, right? 1351. So 1334, 1335 is what we were looking at it. So that has come closer to that particular level. So once it broke the 1400, it fell to the next important level. So next important will be 1225 into 1.055 this one. So 1225 into 1.055, which is 1292. So the next support you can mark it somewhere closer to this, approximately, if it comes to that. Okay. So these are levels where probably you can look towards trading in a very easy manner using Fibonacci ratios or Fibonacci numbers, whichever way you want to use it. So the 23.5%, that is any fall, any low, that into 1.235 has to happen before the market starts giving a thumbs up to that stock. Now, if you see in this particular case, it is a 1500 levels. Now, Infosys is stagnated at 1500 levels. Now, if you look at even previously also, when Reliance fell, approximately it was 23 and after 25% in big falls. See these type of falls, 2500 and 1979, so which is 500 points, which is approximately 20%. So similarly, if you have on a close basis 2533, 1979, same thing, like 500 points fall, which is also approximately 20%. So 23% getting much below is going to be difficult. So that's the reason why this particular one, the I will not go below this, generally speaking, because it is a very important stock, heavyweight, index bearer. So normally 23% fall should not happen. So you can identify stocks which are coming, which are declining very closer to that point, and take a call for buying. Now let's look at some stock which are slightly on the decline phase. Let's look at some of the HDFC Bank, which is still in a fall. So HDFC Bank slightly, that has some spike from 1462 to 1572, right? So when this started to fall, this is the high, which is approximately 1750 levels. So 1750 into 0.235 is just 411. So minus 4 approximately, if you take 410, 1350. So you can draw a line that it should not go much below 1350. Okay. So approximately this levels. So 1350 levels will be held by HDFC Bank if it is to remain in its bullish phase. Previously also we have seen the same thing happening here when it have a big fall, 1725, approximately 1300. Now 1350 we are talking because it is slightly on the higher side at this time. So these things help you to get good clarity. And if you see this particular fall, 1750 into 1757 into 14.5%, means it is 1500 approximately. A 1500 was supposed to give a support. So we got support closer to the 1465, 1470 levels, where we got good support coming in the market. So there will always be some plus or minus. So when you do an investment, you cannot exactly pinpoint that it will exactly stop at this. Sometimes it can happen. Sometimes there can always be some overlap thing that can happen. But if you measure from here, we measured it. Suppose if you do it from this level, which is around 1271. So 1271 into 1.145, it comes to 1455. So 1455 is where we got. So one of these levels can offer this type of support. So exactly 1455 to 1460 was there. It came that, and it is trying to bounce from that level. Now these are the ways probably you can look at the Fibonacci ratios and numbers, and you will get a very easy answer for approach for the investment. Now I told you about the Nifty. How Nifty, the next resistance levels, whatever that we are looking at it, we are looking at some intermediate levels at 20,640 levels also. Bigger resistance we are looking closer to 20,935 and then 21,500 levels. So these are important Fibonacci ratio projected levels. And if it going to fall, we have used for intraday trading, we have used certain numbers, like you can buy up to 20,118, 120 and then look towards some higher level. That is purely for intraday. Then we have also looked at slightly bigger picture of 19,935 and 19,000 odd, 19,940, 950 levels as a bigger stop loss using a 23.5% retracement for the move that has happened from 18,830 till now. Okay, so you can, if the numbers are significantly higher, you should use a 23.5% retracement. You should not wait for a much bigger thing to happen. Now in the case of even HDFC Bank, for example, now if you're using it, you can use 23.5% from this pandemic low. Let us say it has come closer to that 1490, 1492. Okay, so you should use it from some very important level. 23.5% retracement will not be broken. Now we are using from the pandemic low. So for any important stock which is on a decline phase, use from the pandemic low and see whether the 23.5% retracement will hold. Now let's say in the case of ICICI Bank itself, or we look at Tata Motors also. So ICICI Bank, the pandemic low was this. So we can say comfortably that anything. See, if you look at it, in this case it was slightly below 23.5%, came up to 38.6, 38.2. In this case now it's 23.5%. As the rally keeps taking place, we should now look at see this particular place. It will not even come to the 829. It will not even come to 829. We have to get satisfied with maybe slightly lower Fibonacci ratio also, maybe something like 14.5% or approximately that particular place, to know that the support will come, because 23.5% means it has to come closer to 833. So we have to make a judgment that since the last low was made at 23.5 and that has been taken off, we should now look at something higher Fibonacci ratio level where it will stop. Okay, so which we are projecting something like 14.5 to 15% of that particular one. Similarly, you can look at let us say Tata Motors. We look at Tata Motors SBI for illustration, and Tata Motors has done exceedingly well, right? So you need to make a projection right now. So this time when the fall was there, it came from 665 to 593, which is approximately 70 points. So 70 points, you have, as I told you, it's around the 10% mark, 67, 68%. So 9 to 10% is a general fall, even in a bullish market. Now, in this particular case, we have to look at let us say, from here, from important low. This is the pandemic low. So in the pandemic low, in the bigger correction, it happened to 38.2%. Now we need to look at this. It has gone up so significantly that this 23.5% and all is very far off. So at that point of time, we need to calculate that how much of fall can normally take place. It should not be more than 23.5 or 25% normally for the stocks. Now let's look at this stock. Now the close versus 517 Tata Motors. We look at 23.5. In that case, we will keep that as 25% approximately. So 385, 386, 387 is where probably we are looking some sort of a stop. So 366 on a spike basis, but the close, if you look at it, none of the monthly close was. Say if you look at 3411, this is 433, this is 404, and this is 388. So the worst monthly close was 388, and that is where you would have bought, and after that it has rallied. So we should look at any fall not more than 23.5% for any correction. So right now, if you look at 717, so 717 into 0.235 or 25% correction, we should not see anything below 537. That is what it says. Now this is the level. So the correction should not come. Any correction should not bring it below 537. But whether that 537 will come, it may not come, because the normal fall generally is speaking around 8.5 to 9%. So we have to stop in that fashion, or a bigger correction could take place up to 14.5% to 15%, which we have seen in the case of Reliance and HDFC Bank. So if there is a fall which is closer to the 14%, 14.5% in a bigger stock, I think we should jump to that, and waiting for 23.5% is only for averaging it for the investment. Now we can see this for let's say SBI. So State Bank of India, there is a consolidation phase, and for those who are looking for investment, it should not drop 629 into 23.5%. It should not fall below 481. It should not fall below this. That's where that's where the last line that has been drawn. But I told you 14.5 to 15% itself is a good level to watch for. So if you look at 629. 629 into 0.855, 14.5%, it comes to 537, okay, 545, 543. So this time it came closer to the, on a close basis was 522. So slightly more than even 14.5 to 15% there was a drop, but it did not go much below that. So closer to that 535 levels, if you have invested, then you would have definitely got a much higher return. So 14.5, now even HDFC Bank, though it's falling, approximately at 14.5% was 1500 levels. So now either you can use it from this level, or we can use it from this level also. So 425. So 425 into if you look at it 1.145, it is 486, right? So 486 is another level. Okay, so approximately these levels, very easy for you to do all these calculations and get into the market for buying. Now, if you look at the Fibonacci, big Fibonacci from the pandemic, so this was approximately 23.6%. So this time also it was maximum was 23.6% retracement came. So from the pandemic low, I think we should not look for anything which is more than 23.5% in any big stock from now onwards. So that's a very important thing that if you remember, then in that case we should not see anything below 515 as far as SBI is concerned. Now it's at 571. So if it drops closer to 520, you should take heart and buy. That's how it's. So 571. If it falls to 520. Then in that case you should look towards buying, because more than 23.5% retracement from the pandemic low is an unlikely occurrence now. Now you can look at some other stock which could be, I would say, let's say we have seen okay, Cholamandalam investment in a mid cap stock. So there has been a small drop in this case. So let's put the bigger picture first. 23.5% retracement from the pandemic low. So there should be no fall below 993. There should be no fall below 993. Now from this level you will put a Fibonacci numbers. So it has already come to 1090, 1098. If you look at it, this is a 61.8% retracement. It has come to 1098. Okay. And what is the percentage of fall from the top? 1272, and this is 1085. So 1272, so 1085 divided by 1272. Approximately you have got a 14.5% fall. This is a 14.5% fall. That's what I'm saying. You got a 14.5% fall. So it is on the basis of technicals. I'm not saying fundamentally something happened. That's all okay. But based on the technicals, I think this correction has come decently. And if it is another 23-25% of fall that comes, maybe another 7-8% of fall of 100 points can happen. So this is one way of looking things a little easily. And also, if you look at the trend line, also, I think let's look at this level. And so we should take support in this month closer to the same place now. So 1075. So I think we should take heart and buy closer to 1084, 1085 in Cholamandalam, because the percentage of fall is around 15%. And we have clearly said that below 993 it should not come, because it is a 23.5% retracement from the bottom to the top, as far as Cholamandalam is concerned. So the extent of fall is approximately 990. You can put a stop loss for big investment and take a buy closer to 1080 levels, okay, for big investment. And since Cholamandalam investment in mid cap has performed well, we should keep look towards higher levels. This is based basically on the technical parameters. So let's look at probably see the Asian Paints, which is a falling stock, excellent stock, but right now it's not doing that well. So Asian Paints, if you look at it, so let us say this particular thing, 3582, 2685. So what is the fall? 2685 divided by 3582, 25% fall. So this is the one, this is the top, and this should be the bottom. So if there is a fall which is closer to this place, it is really worthwhile to take a call on Asian Paints. Now whether it will come to that extent, if you see the fall already that has taken place is from 3568 to 2931. Approximately 18%, and I think the extent of fall could be in this particular low. From this low, it could have been only 6-7% more. So when you are getting such a thing, with the risk being on the lower side, estimated to be not much, and reward is going to be more, we should look towards trading. Okay, so this is how we use the concept of Fibonacci numbers and ratios in stocks. And as you learn and as you practice it, I think you will find it very interesting, even as a hobby, if not for trading purposes also. So try this Fibonacci numbers and ratios, and probably you will be enchanted with that. Okay, so you can use it along with other indicators in case if you are familiar with that. And we will come to the next topic, that is the Fibonacci trend lines and normal trend lines to supplement this. Okay. So we will look at it in the next webinar. Thank you, and if you have any questions, please ask. So thanks for your participation. We will see again on next week. Thank you.